how in the world do I gain financial freedom? So in essence, how do I get enough cash flow above my expenses in a way that maximizes the time for the things that I want to do in this world? It's something we all want. I mean, do you really want to wake up and do what you hate, spend all your time and energy earning a paycheck just to survive? What we desire is to live a life where we do the things we love more often. What I'm going to do is share an asset with you that will be the fundamental key to allow you to do so. It is what we call the and asset. This asset has been used for over 100 years. It has been used by the wealthiest families on the planet, politicians, corporations, and even banks. In fact, this asset is so profound that banks store billions of dollars in this asset. So what is this asset? Simply, it is specially designed whole life insurance. If this is your first time hearing this, you may be confused, you may be upset, you may want to end this video. But then again, you have another side of you, a side that is curious, a side that is asking, is this true? A side that says, is there something the wealthy know that I don't? How can whole life be such a powerful asset that so many wealthy people use, especially when I hear so many bad things about it? Once you hear about the characteristics of the specially designed whole life contract, you will realize no wonder why they all utilize it. This asset allows you to have your dollar do more than one job. It allows you to store and compound your money while utilizing it at the same exact time. It is why we call it the and asset. Fundamentally, it is life insurance. So when you die, you can leave a legacy to the people you care about most. But at the same time, it allows your money to grow for you for the rest of your life. So to make things simple, it is the most efficient way we can save and use our money while allowing us to show up intentionally in our lives. Let's take a deeper look at this asset and why it is so powerful. First and foremost, it is a powerful asset, but it is not an investment. This is whole life insurance. The characteristics of a whole life contract are fundamentally different from an investment. So as we go down the journey, keep in mind that since it isn't an investment, we shouldn't compare it to one. What whole life insurance does is it enhances your other investments. It makes them more efficient and produce more output to achieve the desired result. This is the real power behind the and in the and asset. We now no longer have to choose. We can now save and compound it in our whole life policy and use that same dollar to go achieve a greater result somewhere else. At its core, think of an iPhone. An iPhone may cost you, let's just say $1,200, but your iPhone has the ability to make you millions and millions, if not billions of dollars. Your iPhone allows you to produce greater results than if you didn't have it. But just having an iPhone doesn't necessarily make you rich. What you do with the phone helps you produce greater results in life. The and asset works the same way. I don't want to just talk about only the pros. So conversely, if you use your phone irresponsibly, your phone can cost you way more than $1,200. It could put you in jail, you can go bankrupt, loss of reputation. We go to some pretty dark places. So if utilizing properly, the phone is no longer an asset, it becomes a liability. So with the and asset, if set up and used improperly, you could end up in a worse off scenario than before. But because of the way we design the and asset, the risks are very minimal. But as with everything with great power comes great responsibility.
With great power comes great responsibility.
At the end of the day, it boils down to how we use the tool. Your phone, hammer, specially designed whole life contract. So what is the most important thing is your mindset, education, and ability to take the right actions when utilizing the tool at hand. So how does the and asset really work? For starters, here are a few important key things we have to make sure we have when utilizing this strategy. First, we must choose the right company. The company must have strong financials, have a proven track record, be mutual company, and pay dividends. All of these factors make the contract fundamentally super robust. Secondly, we must design it in a specific way. In your whole life contract, you can do one of two things. You can either maximize the cash or maximize the death benefit. It is kind of like a teeter-totter. The more you maximize the cash, the less death benefits you have. And the more you maximize the death benefit, the less cash value you have. Because the and asset is designed to optimize the living benefits, what we do is we design it in a way to maximize the cash and minimize the death benefit. This gives us access to more cash and liquidity to show up more powerfully and intentionally in our day-to-day lives. Let's take a look at both examples side by side. The first one is a traditional whole life contract that maximizes the death benefit. This is exactly why most people are not a fan of whole life insurance, because it gets compared to an investment and it looks like this. No cash value, high death benefit, no liquidity, terrible returns on the dollars we put in, and it has no flexibility, which I'll discuss a little later. On the other side, you see we have way more cash value, which gives us way more liquidity. We have a lower death benefit, which minimizes the fees, commissions, and the cost of insurance, which makes our policy more cash rich. So to take this another step further, let's discuss some more of the powerful benefits of whole life insurance. Well, it's safe, as it isn't exposed to the market losses. There are guarantees built into it, guaranteeing your cash value growth and a permanent death benefit to your family. You can utilize the cash value inside of it. There's creditor protection involved. It is private and off the grid. There's no way anyone can know that you have it unless you disclose it. And if it wasn't already great enough, it has tax advantages, which we can utilize the money tax-free, and the death benefit gets paid to your beneficiaries tax-free as well.
This is it.
We are rich.
When I start talking about the and asset, immediately I get flooded with questions, as it seems too good to be true. So here are a few common ones. Is it tax deductible? No, it is not. Do I need to take a health exam? Yes, you do, as it is insurance. You must qualify for it. Can you contribute monthly? Yes, but it's more efficient to contribute annually. How much does it cost? The question and what is the minimum amount I can put in are fundamentally two questions that don't make sense, and here's why. When you go to store money in your bank, you don't ask these questions. When you have cash flow, you just store it in the bank, and that is it. Once you need it, you use it. Think of the and asset in the same framework. You store money with the life insurance company, it grows, and when you want to utilize it, you can. So it isn't a cost, as it is just a transfer from one place to store capital to another. And two, once you realize how this truly works, the question then becomes, what is the most amount of money I can store here, as it is such a powerful asset? But the simple answer to the question is, it is the amount you are saving that is above your expenses, and the money you are earmarking to use for opportunities in emergency is the dollar amount that you should consider storing here. So it officially becomes your emergency and opportunity fund. Something to consider though, if you are asking what is the minimum, you likely aren't ready for it yet, as there may be some fundamental things we have to fix first, such as improving cash flow, eliminating debt, removing bad spending habits, making more money, shifting your mindset, or where you are currently storing your inefficient dollars at the current moment, or even fully understanding how the and asset works. If this is you, that is perfectly okay. Everyone's financial journey is different. Usually while you are working on improving your financial and educational system, we can still implement a strategy called convertible term. This allows you to get protection for your family, maximize your health today, and when you are ready, we can convert that term policy into a whole life contract. A very basic framework when thinking about are you ready to start from a cash flow perspective is, can you contribute at least $15,000 per year? Now, if you're younger, you have time on your side, you can consider starting with a little bit less. But if you are older, you would likely want to consider a little bit more. So then the next question we get a lot of is, can I use this to buy a car or pay off debt? The simple answer is yes. You can use it for whatever you want. When I share this must be used responsibly, that is super important. Some promote this asset to be the one-stop shop for all your banking functions, but here at the And Asset, we believe that you should utilize your policy for asset-producing activities and not liabilities. If you can use your policy to buy assets that produce cash flow and have your cash flow pay for your liabilities, that is how you build real-life wealth and become financially free, like we originally discussed was the goal. But at the end of the day, the answer sometimes comes down to, it just depends. And that is why it's important to talk through it with a professional who can help guide you through this concept. Another question, why doesn't everyone have this? Well, it isn't taught in school. Most financial advisors don't understand it, and we criticize what we don't understand. The industry has a bad reputation, and rightfully so. And the institutions and banks don't want you to know about it, as it will remove money from their systems. How does it work when utilizing the cash? When we use our cash value, the policy is being collateralized, meaning that we borrow against the money we put into the policy. And that dollar is being compounded, and the insurance company gives us a loan against it. Is there an interest rate to borrow from the insurance company? There is. So fundamentally, you are using leverage, which is why you have to be educated in using this tool. But this is also the power behind why our money keeps compounding even while using it, and why we are able to get tax advantages. Do we have to pay the loan back? And am I paying interest back to myself? You do not have to pay the loan back, because when you die, your death benefit will pay off any outstanding loan and the remainder will go to your beneficiaries. But I encourage paying the loan back in majority of the scenarios. And in regards to paying yourself back the interest, this is fundamentally wrong. You may hear this from time to time on other videos in the industry, but I'm here to tell you the truth. What ends up happening is when you borrow against your cash value, the insurance company charges you an interest rate. That interest rate gets tagged on to your overall loan balance. And so you are paying the interest back to the insurance company, and the interest is not coming back to you. Fundamentally, the concept of paying yourself back, I can conceptually only make sense, is when you break it down to the concept of when you own a whole life insurance contract with a mutual carrier, you are now an owner of that company. And when the insurance company charges you an interest rate, and you pay the interest back to the insurance company, in theory, you're paying interest back to your insurance company as an owner, which makes the insurance company more profitable, which in theory could return a higher dividend to yourself. Another question we get is, can this be used for retirement? Yes, even though we teach entrepreneurs and real estate investors how to utilize this tool to enhance what they are doing, this will enhance your retirement as well. It can improve the amount of cash flow you will have in retirement and maximize the efficiencies of your market-based accounts. What I'm sharing is a very basic understanding of the concept to get anyone started into a policy. But if you are a business owner and have a more complex situation, multiple business owners, employees, high cash flow, complex structures, trusts, we are able to do more advanced business strategies with the and asset that takes proper planning with the right team. With all that being said, thank you so much for taking the time out of your busy day to watch. Please subscribe to the YouTube channel if you want more education in regards to how the and asset and overfunded whole life insurance really works.